Everyone's heard the story of the British Empire, discipline, courage, and ships on every ocean. That's what the textbooks say, a nation of explorers, inventors, and brave sailors who ruled the waves. But that's not what built it. Britain didn't conquer the world with ships. It conquered it with debt. Behind every cannon, every flag, every marching band, there was a loan agreement. Every victory at sea began first with someone's balance sheet on land. The year is 1600. England wasn't the powerhouse you picture today. It was small, broke, and politically messy. Spain was swimming in silver from the New World. The Dutch ruled global trade. France had armies, land, and gold. And England? Mostly bad weather and debt. But where other nations saw weakness, England saw a loophole. It realized something simple but revolutionary. Power doesn't come from gold in your vault. It comes from your ability to borrow it. Instead of squeezing peasants for more taxes or begging aristocrats for donations, England invented something new, a system that turned private money into public might. In 1694, the Bank of England was born. Not a dusty bureaucracy, but a radical idea. For the first time, a government could raise huge sums from private investors in exchange for guaranteed interest. That meant wars could now be fought on credit. Fleets could be built before the money even existed. Britain found a way to turn promises into gunpowder. And that single idea, borrowing to expand, became the DNA of empire. The crown got its ships, the lenders got their interest, and ordinary people got the bill through taxes, inflation, and a lifetime of working to pay for wars they never started. Sound familiar? It should, because every time Congress raises the debt ceiling, the same pattern repeats. Different empire, same math, spending first, printing later. We may not be building battleships anymore, but the game of power is still played in credit, not courage. By the dawn of the 1600s, England had found a new weapon. Not the musket, not the ship, but the company. The East India Company began as a trading venture and ended up as something far bigger, a corporate army with its own navy, diplomats, and soldiers. It didn't just trade goods. It collected taxes, started wars, and governed territories. Imagine a business with shareholders sitting in London, but its branch offices stretching from Bombay to Bengal, all enforced by tens of thousands of hired troops. This was capitalism with a crown seal. The company had a monopoly over trade, granted by the king himself, and it used that power to build an empire within the empire. It was a profit machine that fused commerce and conquest. Spices, silks, tea, these were just the headlines. The real story was extraction. Local economies were bent to serve investors across the ocean, and when resistance came, cannons spoke louder than contracts. Think of it this way. The East India Company was like Amazon with an army, or a corporation writing its own foreign policy. It had the same goal every modern giant has: expand, dominate, and never let competition catch up. And if you think corporations run the world today, you're not wrong. Comment's still true if you see it. While one arm of the empire traded and taxed, another thrived on something darker. Between the 17th and early 19th centuries, Britain became the world's largest trafficker of enslaved people. Millions of Africans were torn from their homes, shipped across the Atlantic, and forced to labor on sugar plantations in the Caribbean. The conditions were brutal. The mortality rates were obscene. But for the empire, it was business, and business was booming. The profits from those plantations flowed straight into London's banks and insurance houses. Lloyd's of London, a name that still stands tall today, made its fortune by insuring those slave ships. Every voyage, every human life was turned into a financial calculation. A risk premium, a profit margin. Back then it was sugar. Today it's supply chains. Cheap labor still builds expensive lives. The products may have changed, but the math hasn't. Someone, somewhere, still works for less, so that someone else can pay less. The ledger that fueled the empire hasn't closed. It's just moved online. But Britain's hunger for profit didn't stop at forced labor. When the empire began bleeding silver to pay for Chinese tea, it found a new export: opium. Grown in India, shipped to China, and backed by the British government, this narcotic trade flipped the empire's balance of payments overnight. Millions became addicted. China's economy destabilized. When Chinese officials tried to stop the trade, Britain sent gunboats to enforce its right to sell drugs. It was war for profit, disguised as free trade. The same banks that funded colonies funded this too, turning addiction into a line item on an imperial spreadsheet. They weaponized human weakness to balance their books. They weaponized addiction to balance trade. Today, we weaponize credit. The methods evolved, the moral calculus didn't. Whether it's debt or drugs, the game is control. Control over markets, over nations, over people. And in that sense, the empire never ended. It just changed shape. By the 19th century, the British Empire had transformed from a trading power into a financial machine. The cannons were still there, but behind them now stood something colder: bonds, interest rates, and ledgers. Britain had discovered a way to turn war into a public investment. Instead of draining the treasury, war now filled it. Through the Bank of England and a booming bond market, the empire invited its own citizens to fund conquest. Buy a bond, they said, and earn interest while your nation expands. Suddenly, every war wasn't just about flags and victory. It was a national portfolio. When you bought a bond, you bought a piece of the empire. The genius of the system was how it shifted the pain. The profits went to investors, the risks went to taxpayers. Victory or defeat, the machine kept running, because debt itself had become a product. Britain didn't just borrow money, it invented the idea that debt could be traded, sold, and resold. It turned obligation into an asset, and that changed everything. Soon, Britain wasn't just fighting wars, it was monetizing them. Loans financed fleets, fleets secured colonies, colonies generated taxes, and taxes repaid loans. It was a perfect circuit. Credit in, conquest out. The empire had found perpetual motion, powered by interest. And that model lives on. Sound familiar? It should. Every time you buy a treasury bond or your 401k invests in government debt, you're feeding the same engine, just without the ships. The system didn't end, it evolved. The empire's greatest export wasn't tea or textiles, it was the idea that power can be printed. But the real heart of the machine was India. After the crown took control from the East India Company, India became the empire's ATM. Every rupee collected in Bengal or Bombay could be turned into sterling in London. Taxes from peasants paid for railroads in Africa, wars in Afghanistan, and the pensions of British officials who never set foot in India again. They called it the home charges, a polite phrase for a vast extraction network. Indian wealth flowed out in rivers of silver. Almost nothing flowed back. A farmer in Bengal might pay his land tax, and that money would travel halfway around the world to fund the next imperial campaign. Every rupee from Indian hands became a pound in British banks. The empire no longer needed loot. It had perfected financial drainage, and the pattern never really stopped. Today, it's dollar debt and foreign reserves. Capital still flows uphill, from poor nations to rich ones, from workers to investors, from the periphery to the center. The tools are digital, but the direction is the same. Then came the cotton crisis. When the American Civil War cut off supplies, Britain turned to India and Egypt. Peasants were forced to grow cotton instead of food, feeding mills in Manchester, while their own villages starved. Famines killed millions. Yet to the investors in London, it looked like a market adjustment, a spike in prices, a shift in yields, then famine, now inflation. Different century, same equation. When prices rise, someone always profits. The empire had become pure mathematics, a system where human suffering was just another variable in the formula for growth. By the late 19th century, the British Empire no longer needed to plant flags to expand. Its real empire was invisible, built not on land or armies, but on networks of finance. London had become the motherboard of global money, the place where power no longer looked like conquest but like coordination. It wasn't about who ruled territory anymore. It was about who cleared the transactions. Inside that web, familiar names controlled the currents. The Rothschilds financed governments. The Barings brokered peace and war alike. Lloyd's of London turned risk itself into a commodity, insuring ships, slaves, railroads, and empires with equal ease. On the London Stock Exchange, investors traded slices of colonies the way we trade tech stocks today. Companies mining African gold, refining Indian tea, or laying telegraph lines across oceans. Each share represented another artery feeding wealth back to the city. London was no longer simply a financial center. It was the empire's brain, pulsing signals of credit and debt to every limb of the world economy. The real innovation wasn't money, it was organization. The empire had designed a financial operating system. Loans in Cairo, investments in Cape Town, insurance in Calcutta, all synchronized through London's books. Every colony became a node, every pound a pulse of power. This was the London system, not an economy, but an architecture. The genius was that it didn't look like domination. It looked like opportunity. Nations lined up to borrow, invest, and trade, not realizing they were stepping into orbit around a single gravitational center. We stopped calling it empire and started calling it globalization. Yet the map barely changed. Britain's colonies exported raw materials and imported debt. London exported capital and imported control. The ledger had replaced the musket. Political independence didn't matter when the credit lines still ran through London. By the early 1900s, this system reached its peak. The pound sterling was the world's anchor. Its value trusted more than gold itself. Colonies and dominions were pressured, or persuaded, to hold reserves in sterling. Their trade was priced in it. Their economies revolved around it. This was sterling preference, the empire's quiet masterpiece, a currency that made other nations dependent without firing a single shot. If a colony wanted to build railroads or buy machinery, it borrowed in sterling. If it exported cotton or coffee, the payments flowed back to sterling accounts. Every exchange strengthened the orbit. Even when Britain lost wars, the system held. The colonies couldn't leave without crashing their economies. And Britain didn't need to enforce obedience. It simply managed liquidity. What gunpowder once did through fear, interest rates now did through incentive. This same logic lives on today. Every time oil trades in dollars, you're watching the old system breathe through a new currency. The dollar is the modern pound, Wall Street the new city of London. Power still sits where the money settles. The names changed, the ledgers turned digital, but the orbit remains. Then came the first crack. The First World War demanded more than the empire's own machine could produce. Britain borrowed heavily from its former colony, the United States. Gold and credit that once flowed toward London began flowing out of it. The empire that had financed others now financed itself with foreign loans. For the first time, Britain was not the world's creditor, but its debtor. When the war ended, the illusion ended with it. The pound still ruled trade, but it was built on borrowed faith. The empire's balance sheet was inverted, its power leveraged. Britain's financial brilliance had turned into its own trap, a network so wide it could no longer support itself. What it had created was bigger than empire. It was a prototype for a global system, one that could outlive any flag or throne. London had drawn the blueprint of financial control, and the world would never erase it. Every modern economy, every global market, still runs on that design. Dependency disguised as connection. Influence disguised as trust. Britain didn't just write the rules of empire, it wrote the software of the world. By the end of World War II, the empire that once bankrolled the planet was running on fumes. London's banks were drained, its colonies restless, and its balance sheet broken. The city that had financed wars, railways, and revolutions now needed a bailout of its own. In 1946, Britain signed the infamous Anglo-American Loan Agreement, a $4 billion lifeline from Washington, tied to strict repayment terms. For the first time in centuries, London wasn't dictating the rules of global finance, it was following them. The pound sterling, once the world's anchor, began to crumble, and in its place rose the dollar. Wall Street replaced the city as the heart of capital. The map of empire flipped. Britain's red lines faded. America's green bills spread. Then it was empires with flags. Now it's empires with finance. The torch of monetary power had changed hands, but the structure stayed the same. Whoever controlled the currency controlled the world. As Britain's political empire dissolved, its financial class found a way to survive. The bankers, traders, and lawyers of London didn't see the collapse as an ending. They saw it as a rebrand. If the colonies were gone, they would build new ones, offshore. Tiny islands like the Cayman Islands, Bermuda, and Jersey became the new outposts of British power. No soldiers, no governors, no flags, just shell companies and secrecy. The laws were written to attract money, not people. Corporations could hide profits, evade taxes, and move wealth without borders. The empire had learned how to exist without existing. These offshore havens became the hidden circulatory system of global finance. Capital could now flow invisibly, avoiding the oversight that once defined national economies. London remained the command center, connected by a web of lawyers, bankers, and regulators who made sure the money kept moving but never stayed. It was the perfect ghost network, every transaction legal, every outcome unequal. The same families, firms, and institutions that once managed trade in slaves, sugar, and tea were now managing trusts, derivatives, and tax shelters. Different commodities, same extraction. The genius of this transformation was subtlety. The empire no longer claimed land, it claimed liquidity. It didn't need colonies when it could own the rules. These islands of secrecy became extensions of London's balance sheet, ensuring that wealth leaving Africa, Asia, or Latin America found its way back to British-linked jurisdictions. It's why the biggest financial centers today still form a ring around the old empire's shadow. London in the middle, the Caymans to the west, Hong Kong to the east. The empire didn't vanish. It just moved to a spreadsheet, and the system still works. Former colonies continue to send wealth north, not through tribute or taxes, but through debt repayments, trade deficits, and capital flight. Multinationals shift profits offshore, investors park billions in tax havens, and developing nations lose more money each year than they receive in aid. The flow never stopped. It simply changed disguise. For every skyscraper built in London or New York, there's a hidden ledger of losses somewhere in Lagos, Mumbai, or Buenos Aires. That's the ghost of empire, the unseen hand that still tilts the global economy. It no longer marches, it calculates. It doesn't conquer, it audits. What Britain created has become the invisible infrastructure of the modern world, an empire that no one can see, yet everyone pays into. If you live in the global south, how do you see this pattern play out where you are? Do you see the same flow, resources leaving, prices rising, debts deepening? Because the question isn't whether the empire ended. The question is whether it ever really needed to. Every empire leaves fingerprints on your wallet. You don't see soldiers or borders anymore. You see prices, gas, groceries, rent, credit card bills, all connected to the same invisible network of global money flows. When oil prices spike in the Middle East, your gas bill rises in Michigan. When interest rates shift in Washington, rent jumps in Texas. Every receipt in your pocket is a tiny echo of a system that still decides who gets ahead and who falls behind. The empire doesn't rule territory now, it rules transaction by transaction. Inflation is just the empire's favorite tax, quiet, invisible, and paid by everyone. You don't vote for it, you just feel it. Your paycheck goes up 3%, but house prices rise 10%. Food costs 15% more, and your savings earn nothing. That's not bad luck, that's policy. The same logic that once taxed colonies now taxes consumers. When governments print or borrow, the first receivers of new money, banks, corporations, asset holders, gain value before prices rise. By the time that money reaches you, its worth has already been shaved. It's the oldest trick in empire finance. Create wealth at the top, distribute debt at the bottom, We call it inflation. The empire calls it equilibrium. Because every dollar that loses power in your pocket strengthens the value of an asset somewhere else. Every rise in interest rates, every shift in credit, every market bailout, someone pays, someone profits, and the pattern stays. Empires end. The math doesn't. Whether it's gold, pounds, or dollars, whoever controls debt controls destiny. The British understood that. America inherited it. And now, as digital money and algorithmic credit take over, the same structure continues. Faster, quieter, harder to see. You don't have to believe in empire to live inside it. You just have to keep paying. Now, the empire is code. The same system that once ran on ledgers and typewriters now runs on algorithms and servers. CBDCs, stablecoins, and offshore data havens are the new instruments of control. Power isn't measured in battleships or colonies anymore. It's measured in who programs the money. Central banks are building digital currencies that can move instantly, trace every transaction, and enforce policy with precision. On the surface, it's modernization. Efficiency, transparency, innovation. But beneath the buzzwords, it's the same playbook. Whoever controls the flow, controls the world. The old empire used maps and trade routes. The new one uses networks and code. A banker in London once set the price of gold. Now a server farm in Virginia can move billions in seconds. Offshore secrecy has turned digital too. Encrypted wallets instead of numbered accounts. Blockchain contracts instead of colonial charters. The empire didn't end. It evolved. The borders are gone, but the balance sheets remain. Not red lines on a map, but black ink on a ledger. That's the real history of power. Every age has its currency of control. In the 1800s, it was gold. In the 1900s, it was the dollar. Today, it might be data, the raw material of the digital economy. The world's new empires aren't nations, but systems, payment networks, digital platforms, AI-driven credit markets. And if history teaches anything, it's that whoever builds the system eventually becomes the system. So what do you think is the empire currency of our time? The dollar, crypto, or something we haven't seen yet? Comment below, because the next empire won't come marching in uniforms. It'll arrive as an upgrade, a feature, a new app that promises convenience while rewriting the rules of value. Next, in Money Laws, Episode 2, we'll trace the birth of Empire 2.0. From the petrodollar to the eurodollar and the rise of the digital dollar, we'll uncover how today's global system was built on the same ghost math that once ruled the British world. The names change, the networks evolve, but the law remains. Money may shift form, but power never disappears. It just finds a faster connection.